The will has been located. The family knows who was named as executor, and someone says, "Now you can divide everything the way the will says." That sounds reasonable, but distribution is usually near the end of an executor's work, not the beginning. An executor may have to obtain legal authority, determine which property belongs to the estate, protect it, address valid expenses and claims, coordinate tax filings, account for transactions, and only then distribute what remains. This video explains those responsibilities in order. By the end, you should understand what an executor generally does, why the sequence matters, and which answers may depend on state law or individual circumstances. The first step is understanding when the executor can act. A will may nominate someone as executor, but being named does not always create immediate authority. In formal probate, a court generally appoints the executor or personal representative and may issue documents called letters testamentary, showing authority to act for the estate. A daughter might bring her parents' will to a bank. The bank may explain that the will identifies her, but it still requires a certified death certificate and court-issued proof of appointment. The executor also does not receive authority over a living parent because the will names them. A will generally operates after death. Authority during life is a different subject and may involve a power of attorney. The person named may be unable or unwilling to serve. Depending on state law and the will, that person may decline, and a successor or another qualified person may seek appointment. Before acting, ask, does this estate require probate? Where must the case be filed? Is a bond required? What proof will banks, insurers, tax agencies, or property offices require? Once authority is established, the executor has to determine what the estate includes. This does not mean the will controls everything the parent owned. Some property may belong to the probate estate. Other property may pass through a surviving joint owner, beneficiary designation, transfer on death arrangement, or properly funded trust. The executor's job is not to guess. Account agreements, deeds, titles, beneficiary information, and trust documents may determine the correct path. For probate property, the executor may need to prepare an inventory and obtain date of death values. Financial institutions may provide statements, while real estate, valuable personal property, or a business interest may require a qualified appraisal. Even household belongings can raise questions. Is an item specifically given to someone in the will? Is it part of the remaining estate? Has anything been removed before the inventory was completed? That is why family members should not assume they can take property immediately. A vehicle, piece of jewelry, or collection may still need to be identified, valued, protected, or distributed according to the will and applicable law. The key question is not, who wants this? It is, what legally belongs to the estate, and what must be documented before anything changes hands. After the executor identifies estate property, the responsibility shifts to protecting and managing it. Suppose a parent's home is empty during administration and a pipe begins to leak. The executor may need to secure the property, contact the insurer, arrange repairs, and document the expense. Waiting until distribution could allow damage to reduce the estate's value. The same principle applies to vehicles, rental property, investments, valuable belongings, and income arriving after death. The executor may need to collect money owed to the estate, pay appropriate expenses, maintain insurance, or arrange professional management. Estate money should generally remain separate from the executor's personal money. An estate bank account may be appropriate, and the estate may need an employer identification number from the Internal Revenue Service. Separation matters because the executor must show what belonged to the estate, what came in, what went out, and why. Using a personal account can blur those lines and make a later accounting difficult. Reliable records are part of the responsibility. Statements, invoices, receipts, appraisals, reimbursements, and sale documents may all be needed. Professional guidance may be important when the estate includes a business, property in several states, valuable investments, an occupied estate-owned home, or disagreement about whether something should be repaired, sold, or preserved. While the executor manages the property, another part of the process begins: notices, bills, and creditor claims. State law may require notice to beneficiaries, heirs, known creditors, or the public. The executor may need to review bills, verify claims, respond within deadlines, and pay valid obligations from estate funds in the required order. This does not mean paying every request as soon as it arrives. A bill may need confirmation. A claim may be late, disputed, secured by property, or subject to a particular court procedure. It also does not generally mean the executor must pay a parent's debts from personal funds. The estate normally pays valid obligations from estate assets. Exceptions can involve a co-signed debt, certain surviving spouse rules, or mistakes in administration, so individualized questions may require legal advice. Timing matters. Beneficiaries may be eager to receive an inheritance, but the executor may need to wait until the claims period has passed, known obligations are addressed, and enough money is reserved for remaining expenses. A premature distribution can create problems if taxes, property cost, or valid claims appear later. This video is not answering every question about debt after death. The narrower lesson is that the executor must follow the required claims process before treating the estate as ready for distribution. Taxes add another layer because the deceased person and the estate may have different filing responsibilities. The executor or another authorized representative may need to arrange the parent's final individual income tax return. There may also be earlier unfiled returns. If the estate receives income after death, such as interest, dividends, rent, or business income, the estate may have its own income tax filing requirement. Federal or state estate tax or inheritance tax questions may arise depending on the estate and jurisdiction. Families should not assume every estate owes estate tax, but they also should not assume no tax work is required because the estate is modest. Consider a rental property that produces rent after the owner dies. That later income may belong to the estate for tax purposes rather than appearing in the same way on the parent's final return. A tax professional can determine which taxpayer reports the income, which forms are required, and how much money should remain reserved. Questions may include: does the estate need an employer identification number? Did it earn income after death? Are date of death values needed? Are state filings required? Should distribution wait until tax obligations are clearer? The Internal Revenue Service offers guidance for survivors, executors, and administrators. A certified public accountant, enrolled agent, or estate tax attorney may be needed for a business, rental income, complex investments, foreign property, or significant tax questions. As transactions accumulate, the executor must be able to account for them. An accounting tells the financial story of the estate. It may show the beginning inventory, values, income received, expenses and claims paid, property sold, reimbursements made, compensation requested, and what remains for distribution. The exact form varies. Some estates require a formal court accounting. In other situations, beneficiaries may receive a report, sign receipts, or approve an informal accounting. State law, local court rules, the will, and the estate's circumstances all matter. The executor is a fiduciary. That generally means acting faithfully for the estate and those legally entitled to receive from it, managing property carefully, avoiding personal interests that conflict with the estate, and keeping reliable records. That duty matters when the executor is also a beneficiary. Suppose the executor wants to buy the parent's vehicle from the estate for less than its appraised value. Even if relatives think the arrangement is convenient, it may create a conflict of interest. Proper valuation, disclosure, consent, court approval, or legal guidance may be necessary. Being a trusted family member does not remove the need for transparency. Questions should be raised if property is missing, records are incomplete, distributions seem unequal, the executor is purchasing estate property, or administration has stalled without explanation. After the executor has addressed the property, expenses, claims, taxes, and reporting requirements, final distribution comes into view. The executor follows the will and applicable law to transfer the remaining property. That may involve checks, deeds, vehicle title documents, investment transfers, personal belongings, or other institution-specific paperwork. An equal inheritance does not always mean every asset is divided into equal pieces. An estate may contain cash, a home, a vehicle, and belongings with different values. The will, beneficiary agreements, sale decisions, expenses, and court requirements can affect the final shares. The executor may need signed receipts, releases, a final report, a petition for distribution, or other closing documents. A reserve may remain for a final bill or tax matter. After the required steps are complete, the executor may ask the court to close the estate or discharge the representative. Writing final checks does not automatically end the roll. Unresolved property, missing tax work, incomplete records, or a later discovered asset may require further action. For continued research, begin with your state court's probate or estate administration page. The Internal Revenue Service offers executor and tax guidance. The Federal Trade Commission explains debts after death, and the American Bar Association provides a general probate overview. Direct links are in the description. This video provides general educational information and is not legal, tax, financial, or estate planning advice. Executor duties and probate procedures vary by state, court, document wording, property ownership, institutional requirements, and individual circumstances. Consult an appropriately qualified attorney, tax professional, financial professional, or government office for guidance about a specific estate. An executor's job is not simply to read the will and hand out property. It is to obtain authority, identify what belongs to the estate, protect and manage it, address valid obligations, coordinate tax work, account for decisions, distribute what remains, and complete the closing process. Understanding that sequence can help an adult child or trusted helper ask better questions before accepting the role and recognize when professional support may be appropriate. Without sharing private family or financial details, what is one executor responsibility you wish more families understood earlier? A thoughtful lesson or question in the comments may help another listener know what to clarify. You can also review the resources linked in the description. Knowing what an executor has to do will not answer every estate-specific question, but it can make the next question clearer.